Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, I am not ready. I don't have the music. I thought I was all ready, but I didn't have the music already. Here we go. Oh, and I must have restarted my computer because I don't hear it. Oh, no. I was producing. I gotta turn on the speaker. Okay, let's start again. Hey guys, it's Monday. And it is summer now, so I definitely can see some hints of liquidity changes. You know, there were a couple of maybe 4,000s, a lot of 3,500s up on the DOM on Friday-ish, last day of the trading month. Oh, by the way, we were betting on a little bit of a move up. We'll come back and check and see if that happened. But liquidity just a teeny bit lighter, and activity, well, there's a decent amount of level 2 changes going on right now for a Monday, but it is fairly quiet so far, and there's some iceberging going on right there. All right, so let's see here. On Friday we did, but it wasn't a super great trade, but it looks like on Friday they did buy the treasuries. Now we've kind of sold back down. Now the treasuries have been like the most constrained of all of them. Like, really, everything else moved. My understanding. This is the first time looking at the charts, but like all of my synopsises and everything that I read in the morning, we're kind of saying that like other things had bigger moves. So let's see here. S&P 500. Okay, well, the S&P 500 is not too huge of a move on the overnight, but there was a pretty big move on Friday because Donald Trump is kind of on the warpath with the tariffs again, saying that China has not been holding up their end of the bargain and all these things. And China are like, yes, we are. And it's a whole big mess. So there is some concern that we could go into full-on trade war. They also increased the tariffs on like metals. So, okay, oil is up cray-cray because of OPEC. I guess, well, no, I was reading that they were going to increase supply. But oil is up. Okay. Gold and silver, they're looking good. Oil might be up, not because of the supply, but because of the dollar. Copper. Okay, copper's up big. 6J. So the big thing that you're seeing is the dollar has fallen further. Like another $0.50 here. And the Japanese yen looking strong as everything else is moving up. And probably Bitcoin too, right? Nope. Bitcoin is actually pushing towards 104,000. Well, that's interesting. Well, I think we should also come in here and take a peek. Okay, so the treasuries still have these moving averages above them. So remember, we don't put too much stock in technical analysis because the whole idea that these patterns are going to effectively predict the next bar is kind of nonsense. But there are momentum strategies, things that are based on like a whole portfolio of assets. And so things like moving averages, the 50, 100, and 200-day moving average do matter. And we are kind of bumping up against the 200 and the 50. They haven't crossed, but they're kind of threatening it. I should also double check here the spread. Spread is still relatively flat and unchanged over the past few months. So, and what about ES? Are there any critical Yeah, we're just dancing around moving averages in the S&P 500 as well. These lines are supposed to be, you know, like what percentage decline from the highs are we? Okay. So now today we do have some news too, don't we? Yeah, US ISM manufacturing PMI at 10 o'clock Eastern time, 49.5 is the estimate. So they expect manufacturing to be slightly in contraction, which sounds about right to me. If that was over 50, that would be a pretty big deal, though. That'd be a pretty big deal. So, and of course, like things like new orders and employment and so forth, those matter as well. So that's kind of the big one we're watching this morning. You're going to get the S&P manufacturing at 9:45 Eastern time. They are kind of knocking on the door of the highs. Just, it was 23 was the overnight high, so... Oh, that's cool. Financial Juice posts ISM manufacturing PMI past market reactions and deviations. And then they show how much each of these went up. Oh, that's interesting that they show ESNQ, gold, USD JPY, and ZT, not ZN. Okay. Okay, whatever. Whatever, guys. Weird, but whatever. Okay. So, and I do have the robot turned on, so we're good there. I think since we have the, you know, put limit orders a bit in, and it seems to be working okay. At least it seems to be working the way that I expected it to. So, I think that means that we can move on to the next thing, doesn't it? I'm not quite sure what's the next thing. Yeah, we'll consider that one done. I don't know why I didn't just say go to the end instead of scrolling all the way down. Silly me. Okay, so the next part is machine learning. Trading views backtester. I suppose we could do that one now. Pay $50. Explain why it's terrible. I feel like that this one, I don't know why I have this one as current, because I don't think either of these ones are happening. And I also don't know why that one is current. Okay, this one we know why that happens, so we can delete that one. I'm kind of realizing that I haven't gone through this list in a while, and that a lot of what I was planning on doing has kind of changed. So I hadn't really planned on what I'm planning on doing. I've been working on this one, but people haven't been getting back to me. Is this the week that I have? Let's see here. No, that's next week. Okay. Have a dentist next week. I also think that my wife is going to her parents' house next. So that's when we would have some time. I never made a video about the dollar index, did I? What was the last one that I made? It was cumulative delta. We were talking about this last time. I think that this is Seth's roadmap to viable day trading. Sounds terrible. Like if it was Seth's roadmap to profitable day trading, then that would get people's attention, right? But I shouldn't say that because that would be like making what do we call it? Like I want to say deceptive marketing claims because it's not really marketing anything, but you know, it would give people an expectation of profit when, so I don't think that that's okay to say. But what would be a better way to put it? Let's ask ChatGPT. Mm-hmm. print and outline for Seth's path to viable day trading. I don't want to say path to profitable day trading because that would give people unreasonable expectations of profit, but this is what I think you need to understand to even stand a chance. Be honest, what do you think? Can we improve it or even turn it into a video? Number one, understand that the chances of success are very slim, and even if you do win, the reward is not always great. Number two, understand it's hard because the market is competitive, so strategies that work can stop working because too many people are trading them. Alpha decay is a thing. Three, proven properties of markets. Markets are statistically efficient. Past price history does not predict future very well. Markets are not informationally efficient. Current price does not reflect all available information. Some assets have a tendency to trend over very long time periods. There are predictable order flows. What do you think, ChatGPT? Your outline is very strong. I told you to be honest, ChatGPT, not to glaze me. It's honest, grounded, and realistic, which is incredibly rare in value in the trading education space. It's clear you're not selling dreams, but trying to lay out what it actually takes to stand a chance, and that's admirable. Here's a breakdown of what's working well and how we can improve and structure it for clarity and possibly for a compelling video, script, or visual explainer. Okay, what's working well? Honest about the odds. This sets the tone and builds trust immediately. Emphasis on competition. You've highlighted a key reality most people ignore. Concepts like alpha decay, order flow, and efficiency. These are nuanced ideas that show you're not approaching this as a hobbyist. Suggestions for improvement. Let's develop the structure and narrative flow to make it more engaging, memorable, and potentially useful in video format. Seth's Roadmap to Viable Day Trading, a brutally honest guide to what it takes just to stand a chance. You know what? I want her to read this part. No, it won't let me read it. Okay. Reality check. The odds are not in your favor. Most traders lose. Many never even break even after fees and slippage. Even among winners, the profits are often not life-changing, especially after stress, taxes, and opportunity cost. Why do it? Because some people enjoy the game, the process, or seek mastery. I tell you what, man. Sometimes with ChatGPT, sometimes I'm really frustrated by what it writes, and I'm like, that's so dumb, that's dead wrong, why would you think that? It's just, I can clearly tell it's a robot, it's based on reinforcement learning. It doesn't really, like, the level to which it understands the ideas, I think, is limited. But then sometimes it writes stuff that I'm just like, that wrote it, like me, better than I could ever write it. And that's what it just did right there. Where even is your bot putting its... Oh, that's a good question, my friend. What did it just do? Orders. It literally tried to put a limit order at...
Order canceled.
At 1. That was so weird, but it canceled it. It should be taking a short. Well, we're gonna have to. Oh, and it's put a ton of stuff on there too. It did not enter into it though. How could that possibly happen? So it should be under manage order short, I think. Manage order short. If the book, blah, 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 blah. Okay, so none of these qualifications got hit. So it tried to do a limit order. So it went my enter long quantity signal name limit true. Oh, wait. My enter short, rather. Yes, I can train. Enter short limit quantity signal name. Wait. Oh. Yeah, that's definitely incorrect. Get current ask, is that what it's called? When ChatGPT gives an answer that aligns with one's bias, they take it as gospel. When it contradicts a bias, they start rationalizing why an AI can be wrong. Well, so most of the time, though, like this is the thing that I think is really problematic about it, is that most of the time, ChatGPT tries to align with your bias. Unless you explicitly tell it not to, it tries to tell you what you want to hear, essentially. But there are going to be times where what ChatGPT gives you is just nonsense. Like it will hallucinate something that makes zero sense at all. It's like, I think that the way that our mind works is very similar to ChatGPT. I do think that there is another component to us, like what people would call a soul or a quantum part. Something that creates the consciousness that cannot just be an emergent property of the neural network itself. It would have to be something that's able to sit and look at and observe everything. And we don't see where that comes from, so it would probably have to be quantum or hidden from us in some way. So I do think that exists, and I think that then there are the other brain structures on top of that, which we have duplicated with AI. The key one being our intuition system, which is essentially a neural network driven by reinforcement. We don't understand the reinforcement mechanisms that humans are using. It's probably much more sophisticated, but we can get pretty good far with AIs by just having it give us responses and then rating the responses and collecting enough data, right? Another part that we have is the more logical processing part. And it seems like that they're kind of starting to work on that, but like how to combine that with what they've got and everything is apparently kind of a mess. Okay, so when our intuition comes out with an answer, we seem to have some sort of checking system that checks and says, does this make sense? No, it does not. We have to go back, and it goes and it checks it and it gets a better answer, right? So that's kind of the part that we do that ChatGPT doesn't do very well. So ChatGPT is going to give you sometimes that nonsense answer. And if you really understand yourself and that mind and everything, you'll kind of start to see where ChatGPT maybe gets it from, which is really kind of weird. Like, you can intuitively sense why ChatGPT might think that, even though you know that it's wrong, right? But when it comes to something like this, like we're writing a road, like I gave it this prompt, it's never going to say, Seth, your whole outline here is complete bullshit. This is all completely false. This is not the way that you need to go. You need to believe in yourself and then study market patterns really, really, really hard. Right? It's never going to tell me that. People will tell me that because people are running on a different premise. They're running with different base information. Most of them don't have that information that we have. ChatGPT does have that information, but I've already limited its context to the stuff that I talk about, essentially. And so it will always tell me something that I like to hear. But the thing that weirds me out about it, again, is that apparently my approach, like the way that I talk and the subjects that I choose to talk about and the way in which I talk about them, is apparently not all that complex to decipher. All ChatGPT has to do is say, I'm going to be really honest and straightforward, and it comes out with the answers in the way that I would say it, and often better than I could ever possibly hope to say it, while still sounding like me. How can it talk like me better than me? That's so weird, but that's how I feel. Trading bots are written by humans, so they will always follow human trading behaviors. That's wrong. I'm sorry. That's just straight up wrong. Because the robots are coming in here and doing things, iterations, billions of iterations to come in and to do things in a way that a human would never think of, frankly. And I think that this comes back to this kind of more philosophical disagreement that I have with technical analysis adherence in general. So, and this is kind of a difficult subject to talk about because people's definitions and everything kind of vary. There are some people that have this idea that anything that doesn't have to do with market fundamentals is technical analysis. I reject that notion. I don't think that it's a very useful language. It's really not the way that we use technical analysis and what people are talking about when they talk about technical analysis. When we talk about technical analysis, we're talking about chart reading. We're talking about somebody looking at an individual chart and trying to predict the future by looking at that individual chart, which is nonsense. There are tendencies for assets to trend over very long periods of time, but in order for that to work, you have to be running it across a portfolio, a huge universe of assets to capture those effects. Okay, so trying to look at one individual thing and saying, "Oh, it's above the moving average, so I'm going to go long," is no, you're misapplying it. Okay, so. To me, technical analysis is looking at an individual chart, trying to predict the future. And there are a couple of kind of ideas behind technical analysis. The people that believe in technical analysis, by and large, believe that the strong form efficient market hypothesis is false. But whether it's strong form or weak form kind of has more to do with, like, does the market reflect like insider opinions, right? But they're gonna say, well, you can predict the future by looking at the past price history, but the current price does reflect all available information. Like, that's why they believe that looking at the chart is effective. It's because they think that I don't need to know all of that fundamental stuff. That fundamental stuff is already baked into the chart for me. And that's something that you're going to hear a lot in the technical analysis world. Okay. Well, and then their next thing is that they're going to say, like, human behavior doesn't change. And so you will see people play out these certain patterns over and over and over again. And that is kind of the whole idea behind technical analysis. Okay. So there are some like quantitative problems with that viewpoint, right? We have essentially proven that the market that it's the opposite, that the market is very statistically efficient, especially on short time frames, but that the market is not very informationally efficient at all. It's not until you get to like a 3 to 5 year time period where the indexes broadly reflect the larger economy. And it's even worse for, when you're looking at other things. And so price can deviate far away from whatever the intrinsic value is. Okay. So that's really the big hole in technical analysis, right? And that is one that is entirely logical and provable, that just kind of like their key foundational assertions are wrong. I suppose that you could say, oh, okay, actually the market is statistically efficient, but not informationally efficient. But there's still some technical inefficiencies that I can take advantage of, right? So you could accept that those things are correct and still believe that the technical analysis methods are correct. Just understand that, like, you're now kind of disagreeing with the vast majority of technical analysis, right? But my issue here is kind of more philosophical. That the philosophical part is, because I don't know if we can really prove that, or how you would really prove that, this idea that, like, people are consistent and so we will play out the same patterns over and over again, especially, again, on short time frames. Because what do I see? I see a market that is mostly random. You go and you look at any of these supposed patterns. The crazy thing is that the patterns, there are patterns where, like, it will go a certain way most of the time. Those actually do exist. You don't make money from them on a risk-adjusted basis, but those do exist. Those aren't the patterns that technical analysis people talk about. The patterns that technical analysis people talk about are all 50-50 from all of the study that I've done. And so I would say that the behavior of people, if you were to look at the market as a whole and pick out one individual trader and try to determine whether their next trade was going to be a long or a short, I think that you wouldn't be able to predict it. I think that it's pretty random. I think that the traders as a whole differ quite a bit. People are actually quite random. It's very difficult to predict their next decision unless you really, really know that individual person. So, people as a whole are just not that predictable in general. So that this idea that the robots, it's a cope is what it is. So first of all, they say people tend to behave a certain way, and that's why these patterns work. So then the obvious counter to that would be, well, yeah, but most of the people trading aren't people anymore. It's robots. And you say, well, but the people programmed the robots, and so they follow the same behavior. It's a cope, dude. It's a cope. The robots are literally going in and backtesting things, going through literally billions of iterations to find patterns and situations in the market, things that we as humans cannot figure out on our own. How would they possibly trade in contradiction of what a human? My own robot trades the opposite of what I want it to do every day. What are you talking about, man? It's a cope. It's a cope to avoid admitting the obvious quantitative truth that's standing in front of us every day. Nobody wants to admit that the vast majority of the action is random. For all intents and purposes, is random. And there are only rare instances wherein, by understanding the participants themselves, you can predict what they're going to do and front run their order flows. Okay. Well, so Amir asks, what do you think gambling in big news is at work? It depends on the news. Okay. So we want to come in and we want to predict order flows. We want to take advantage of informational inefficiencies, right? So anytime that there is like big news, and especially some of these things like trade war, Donald Trump, etc., those are places where we can potentially make a really, really big edge. And there's been a couple of situations during this trade war where, like, man, Trump just straight up told you what was going to happen, and you could have, you could have YOLO'd into options, and there were people that did and really made out like bandits, right? But I think that there's kind of a limit. There's a limit wherein certain moves are just too big. So even though you might have a really good probability of being right, if you're wrong, the amount that you're going to lose is just too much for a retail trader to handle. So that's one problem that you're going to run into. And there are also situations where what's going on is just a little bit too random. Like what Donald Trump does and when he chooses to tweet, like it's usually in the morning. Sure, but like what he's going to tweet next and everything, it always kind of catches you by surprise. And the market is fast enough now at this point that, so there is some news that I would not mess with, okay? Just because they're too big. Like the biggest movers, the ones that just absolutely roil the market and the whole market turns and it dominates the next weeks of trading or whatever, don't mess with those ones. Question is, quantitative analysis superior to non-quantitative analysis? Not explicitly. So there are certain types of strategies that with quantitative analysis, you're going to have you're not really even going to be competitive without it, right? Like arbitrage strategies, right? You have to be fast. You have to be able to calculate things quickly and precisely. And so arbitrage really kind of requires you to be a robot to really take advantage of very well. On the other hand, there are kind of more, we know what's going on in the market, and so we're making more of a qualitative sort of assertion about which way the market is going to go that day, right? Okay, so there's some real advantages to that because you can find edges everywhere and you can find really, really big edges. But the problem with that one is that something completely different could come in and ruin the trade. Or if they're not trading on that informational inefficiency right now, then why would they start doing it in 5 minutes, right? You have to have some sort of catalyst, reason to think that all of a sudden that flow is going to come in. And then the situations where kind of all of the planets align for you to be able to take that trade, it's not every day. So there's disadvantages and advantages to both ways of doing it. How fast is your typing speed? I can type upwards of 110. I was trying to get to 150, but I could not get over 110. Yeah. I really would like to get a new keyboard. I want one of those keyboards with a concave wheel well. Maybe the tenting, I don't know. The tenting part kind of sounds weird to me, but I would just like to have like a glove 80 or something like that, but not enough to want to spend $300 on it right now. So kind of just been chilling on it. Okay, let's go back and finish reading what ChatGPT is saying. Okay, so reality check, the odds are not in your favor. Most traders lose. Many never even break even after fees and slippage. Even among the winners, the profits are often not life-changing, especially after stress, taxes, and opportunity costs. That's especially true. Like the amount of work and yourself that you have to put into it is not worth it. Okay, so why do it? Because some people enjoy the game, the process, or seek mastery. And then it says, a visual idea, fade in with stats. 90% of day traders fail or follow with a voice editor. Let's talk about the 10% and what they actually understand. Cool. Okay. 2, understanding the playing field. The market is a shark tank. You're competing against full-time professionals, algorithms, and institutions. Edges don't last. As more traders find and exploit them, they vanish. This is called alpha decay. You must adapt constantly. What worked last month may not work next month. It also has a visual idea here. Footage of Wall Street trading desks morph into home traders overlay same game, different gear. Know the game rules. What do we know about markets? Even in chaos, there are a few consistent truths. Statistical efficiency. Markets are hard to predict based on past prices alone. Backtests often look good but fail in live trading. Informational inefficiency. Despite price action, markets don't always reflect all known information. Sometimes deep research or faster information can matter. Long-term trends. Some markets, for instance, indexes and commodities, exhibit trend persistence over months or years. But intraday trends are harder to exploit and more random. I've never told it that it pulled that out on its own. Can you believe that? Well, because that's just what the research says. Sorry. Predictable order flow. Not all traders are rational. Large institutional flows, retail patterns, and systematic strategies create short-term edges. Understanding microstructure helps. What to focus on next? You could include a brief roadmap for what a new trader should study next. Market microstructure, risk management and position sizing, order flow and tape reading, journaling and data-driven review, avoiding order fitting, and backtesting. Yes, and I have videos on all of those things. It did a good job. Yes, this could be a compelling voiceover-driven explainer or talking head YouTube video with a B-roll and animations. If you're interested, we can draft a full video script, recommend a visual storyboard, add data visuals and narrative beats to improve pacing. I like the outline that it's given me here. I think that we could turn this into a video. I just did 128 words per minute with 95% accuracy. Okay, Adam, I know every trader talks about order flow, but I have never heard a proper definition of what it is. Can you elaborate on what is order flow? Okay, yes. So more broadly speaking, order flow refers to a study of all of the orders within the market. So in traditional technical analysis, you have open, high, low, close bars, and you have the volume of that bar. In order flow, we additionally have all of the limit orders and what the current best bid, best ask is. And once you have that information, there is so many more types of analysis that you can do on the numbers themselves. The most important one is that if you know what the best bid, best ask is, you can look at the price that every order was executed at and determine whether which side was the aggressor, whether the market order, because it's always a market order, well, not always, but it's almost always a market order matching up against a limit order. And so based on the price that it's going off at, we can determine which side was the market order. Okay, so that's a key one. But then we can also kind of do things and analyze about the liquidity conditions and see things like, are the orders stacking or pulling in that area, and identifying areas of relatively high liquidity and relatively low liquidity, even though that liquidity isn't necessarily all showing up on the depth of market all the time. Okay. Now we can go a step deeper than that, and that is who is submitting the orders. And so you'll often see researchers talk about order flows, and that is because they might have data that allows them to go in and see, what does this index fund do over the course of a month? How do they tend to behave? And the orders coming from index funds, that's that order flow. And so we split the market up into different order flows, and then we kind of analyze each of those order flows, try to predict those individual order flows, and then add them all together to get a prediction about what we think is going to happen in the market that day. So that's essentially what order flow is, okay? Now, in the retail space, people think about order flow as a type of strategy, which essentially means I have the DOM up, or maybe cumulative delta, and I'm looking for some sort of a pattern, short-term pattern in those things, okay? I personally don't subscribe to that type of analysis, but some people think that order flow is a strategy. Okay. Yeah. Oh yeah, so I was doing this thing and I couldn't get So I think I can just come in here and say get current bid, get current ask, and that'll fix the problem, but we'll see. Had a little syntax error there. Very good. I think in this situation, since it's not in a position or anything, I can disable and re-enable it to like reload the strategy. What are you trying to code? We are having the robot enter with a limit order or a market order, depending on the conditions on the inside best bid, best ask. And there was an error that was causing it to place a limit order that made no sense. It wasn't placing it at the best bid. It was placing it like 1. So I think I found the bug in that code and fixed it, which is kind of weird because it's not the first time that I've had that it's placed a limit order. I don't think, and yeah. I heard there is a relationship with break of structure and order flow. Do you know anything about this? I think someone once told me that a break of structure is a switch in order flow or something like that. What is it? Is he saying who boy? Because I don't, you don't think that it's the same guy, is it? No. So a break of structure. So generally speaking, a break of structure is like, here was a previous high, and now we have made a new higher high. And that's where they say, that's where we talk about like, that's a break of structure. Okay. So what a lot of technical analysis people get focused on is like, oh, there's this, and then this thing happened. Right? And they say, because it broke structure, I should go long. This is a breakout trade. And then what happens? Gets forced back into the range and they get screwed. So then they say, oh, it tends to go back into the range. So every time that it breaks out, I am going to go short. And then it does this. And they get screwed either way, right? Because it doesn't work on a risk-adjusted basis. So some people have started to do this. They say, okay, we just broke out here, but maybe there is some sort of other factor out there that will tell me whether this is really going to continue or whether it's going to get snapped back into the range. And some people think or hope, or because I've never seen anybody teaching this, but I sure see a lot of people searching for this idea that the order flow will tell me that whether it's going to break out or what's going to happen in this spot. So I can come in and do all of my technical analysis and mark all of my points and then see when we get to those points what the order flow looks like and make a determination about whether it's long or short. That's kind of what they're thinking, right? So here's the thing. When you have somebody they need to buy, they're a really big institution. And I'm talking about like literally any kind of institution, anybody outside of a retail day trader. When they act, it moves the markets. And for some of these, they could move the market every day. They could move the market every day for a month to acquire as much as they need. That's just the way that it works. So there's not enough liquidity out there to satisfy the needs of the large institutions. Not anywhere close. So if we're coming in here and we just had a breakout long and there's somebody that needs to sell it, guess what? It's not just going to come back into this. It's going to go lower because they're going to keep selling it, right? So whether we're here or there is not as important as understanding the individual players and whether they are likely to buy or sell at that time. Today, we know that because there's a relatively important PMI number at the top of the hour, large players are very unlikely to do much of anything until then. So I wouldn't expect to see any kind of a breakout. And if I do start to see some sort of a trend, it's a really strong hint that maybe somebody thinks they know what PMI is going to be. Right? So yeah, I don't like these ideas of like, I'm going to combine order flow with past technical analysis and all of that sort of thing. Because again, the issue is that there is not really anything in the market generated data on a short-term basis that really effectively predicts where price is going to go in the next few minutes. There are a lot of really narrow divergences from what a truly random market would be. For instance, if you come in and you pick an individual order and you say, is it a market buy or a market sell? It's a market buy. And then you come back an hour later, there's a 0.5% chance that higher chance than normal that it will also be a buy. And why is that? Just because these big guys, they have to buy or sell a lot. If one of them are active in the market that day, then it's going to be like that all day. But you might not necessarily see it in the price because there's all these other things like correlations and market making behavior, playing shenanigans and all of that. Your eyes will be on 5% in the 30-year. So where do you calculate 5% in the 30-year to be? Because it is not showing me today in the micros where we're at. These spots are very nice for short scalps and instant take profits, but I place my order slightly before the breakout in and really quick out. So one thing is that, you know, if we have a key level, oh my gosh, this is dying here. But if I have a key level, there tends to be limit orders in front of it and stop orders after it. Okay. But I have never found any proof that if you go and you look at the 50-day moving average or the previous day's high or low or any of these or pivot levels that retail day traders tend to look at, that any of those things tend to be effectively predict where the limit and stop orders are going to be. The only one that I've found evidence of this happening around is round numbers. So if we were like at 111, for instance, I would expect there to be a lot of profit taking before that, a lot of icebergs at the 111, and then stops if they went past that. That's one that you can use. Can you explain what a confirmation entry is? Yeah. So what they're doing is, again, why did it get so small? Okay, so this is like the breakout, right? So what if it comes back to that line? That line is now support. It goes back up. So there is kind of the before she goes, and there's the after she goes. So you can wait for it to come back, watch here, see are there like limit orders trying to catch it or whatever, and then, you know. Now, again, this is something that I find doesn't really work, but that's what people are talking about when they talk about a confirmation. Oh, you're looking at Trading Views US 30. I gotcha. Well, I'm thinking that what might happen is you might get a move based on the PMI, and it will go, and let's just say that it's hawkish, and we see the Treasury sell off, and then the 30-year is above 5% again. You know, it might, because every time that we've gotten to 5%, what I don't see like people fighting it. What I see is they let it go into it, and then the next day they buy it out of it or something like that, you know? Does seem that there is like long-term support at 5%, but just on the short term, it's not necessarily going to help us on that particular trade, I don't think. It's kind of more of a, okay, tomorrow, if we're above 5%, depending on the other things that's going on, that might contribute to flows long. Essentially, fundamental traders coming in because they think that the price is, that the interest rate is too high. Should have ironed. I like my collars to just kind of, I'd be like this, not like, nobody likes that. Hate it, but whatever. I'm a little miffed. I think that the whole, business dress is kind of a lie. Like what you see always in like fashion pictures and everything is like not what you're gonna look like if you buy the clothes. Your collar is not gonna stay as crisp and popped. It's not gonna fit you because they always make the armholes for like some sort of a bizarre giant. And then the pictures, they tailor them. Well, we still got 30 minutes. Kind of sucks that, like, as soon as that number comes out, I gotta go. Because, yeah, I've really been struggling because PMIs have been my best trades. But, by the way, if yep, it does show up on the, that it's coming. Nice shirt. It's an okay shirt, yeah. I do prefer wearing a more businessy shirt for you guys here on the stream. I don't know if anybody cares. I used to think, well, maybe if I looked more authoritative on the stream, then more people would watch, but I don't know if it matters. What I'm coming up against now, what I'm starting to find now, I don't know, like maybe I've gained a key insight into all of this, but what I'm finding is that there is not enough time for people to discover us. Like that we're only on here for 90 minutes now. Like it affects all of the numbers. And if I was doing something like I was streaming until the stock market closed every day, stream would probably be more popular because people would have more time to find us. So it's a little, I don't know, that part of things feels a little crushing. And then I just haven't really had time to be able to like go in and do anything. Man, this weekend, I spent a pretty good portion of my time replacing all of the door handles in the house because he can open up the child locks. And so he has taken to trying to get into everybody's room and every place that we've been keeping him out of. Like he got into my wife's craft room and like dumped the perler beads that they've got just everywhere, which is an absolute nightmare to clean up. So I had to replace all of those. He has just been like him getting older has not made it easier. It's gotten worse. And maybe we're reaching peak, but maybe not. Maybe he just always is like this and it gets worse and worse as he gets older, and I don't know how we deal with it. Because some of these kids, they do get to the point where they can't stay at home anymore, right? Like that's what happened in Rain Man. That's what happened in Rain Man. Was he determined that it was too dangerous. So I have not had much time to work on the channel, make like actual videos. Not that I feel super passionate about any one video coming up, you know? Because we had it pulled up here a little bit ago. Plan videos. Well, we want to make one about the dollar index and we want to make one about the order imbalance. So those are indicators. Definitely going to do those. I have on here influencer red flags and trader mistakes. I think I can put those into outlines. Oops. I think this one comes before this one. Roadmap to. So I think that this video could be interesting and useful because even though it's covering the concepts that we have done in every video, I don't think that I've ever really in a video strung it together in a way that helps you understand why I think that these concepts are so important for you to understand in order to stand a chance at day trading, you know? So that one is kind of interesting to me. So I guess that gives us 5 videos that we could potentially make. My family will be going on vacation, so that should give me some time to work on some videos. Of course, I could spend the whole time working on Rust. Nah, I don't think I'm gonna do that right now. But sunglasses are missing? I have some sunglasses. I'm going to work and focus on my thesis. Is that for school, or are you talking about something else? You could also pre-produce videos, create stream highlights or things like that. Yeah. I guess the thing is, what I'm getting at here is that I feel like that the videos that are like the most valuable to you guys, I've already made, except for the ones that are to do with actual indicators. So I should be making videos that are intended to grow the channel, and I just don't see anything moving the needle. I've given up on really trying to grow the channel in a meaningful way. So I feel that the life situation is just too... There was a point there where I thought, okay, you know, like we're getting some things squared away with the kids, make it hard to take on risks, okay? And you know, a bunch of other things kind of going on, and I was like just about there to be able to take bigger risks and everything. And now I am further away from that than ever. The kids are just requiring more time and energy. I don't have as much time to day trade. So I think that what's going to end up happening is I'm going to build the stock portfolio up a bit more. That sort of a thing. But some of our other dreams we have taken a big step back from, and it might be years, might be 5 to 10 years before we get back into that place where we want it to be. And so then it's like, well, we can make some videos and maybe that can help us get us there. And I just don't see how that's going to happen. Like, you know, some videos that I think would be interesting and that I would like to make. But for most of you guys here on the stream, they're not, you already know this stuff. And I don't think that it's going to attract a ton of people on YouTube, you know? So I just feel really dissatisfied with that. Hate to be a bummer, but that's fate. We are where we are now, and we deal with it as we can. Gold sure is shooting up here. Gold's shooting up. Oil is giving up its gains hard. S&P has been pretty decent since the open. We are getting those first PMIs. 52 versus expected 52.3. Not much of a reaction there. There is kind of light liquidity on the offers there in ZN. The air conditioning is breaking out. Feels good. Just go all in short in case World War III breaking out. Jeez, man. I tell you what, like when it comes to like geopolitical news and all of that, last week, maybe the week before that, it seemed like everything was going well for the economy and everything else, and or maybe we should say everything was going well for Donald Trump. You know, there is a little bit of a connection between Donald Trump and the market now at this point, right? Everything was looking pretty good last week. And now this week, it kind of doesn't. Negotiations with China not going so well. De-escalating the Ukraine war. That's definitely not happening. So that one's like, I'm not going to say that Ukraine attacking Russia. So what happened was Ukraine like smuggled these cars into Russia. And then when they got close enough to like airports and things like that, they sent these drones out, and then the drones went and blew up a bunch of planes and stuff. So, you know, that's like super cheap drones destroy $1 million planes. That hurts. That hurts Russia. And so, I mean, that is a big victory for Ukraine. Ukraine didn't tell anybody about it, but I don't think that particular part of it is a huge deal. But what is a huge deal is Zelensky is essentially escalating. This makes a peace deal, I think, even less likely. And what Donald Trump wants is a peace deal. What the markets would like is a peace deal, right? So if your goal is peace, I think it took a big step back this week. And yeah, the whole idea of like a World War III sort of a thing, it definitely gets brought to mind more and more frequently these days, doesn't it? I'm not even sure if it would be Russia. So I saw this thing. So apparently the Trump administration does want to be friends with Russia. So everybody's thought, oh, you know, he's just a Russian agent or something, or because they're all fascists, they like Russia because Russia seems kind of fascistic. But the reasoning that I've been getting from conservative commentators is that the Trump administration thinks that if they can form alliance with Russia, that will allow them to isolate players like Iran and China, essentially. And then it can be everybody versus China, and that puts us in a much better strategic position. Makes sense to me. But man, I sure worry a lot about China trying to take over Taiwan. Apparently the US has military there. So like, even though there's kind of this question about would the United States actually step in and do anything, I kind of think they would. Although what they might do might be not all the way, because they'd be too concerned about nuclear weapons, right? You think that China would threaten nuclear weapons over Taiwan? I sure hope not. But gosh, it just seems like, I don't know, seems like China is working towards it. I don't know if they could actually pull it off, but you know, the liquidity here in ZN isn't really recovering. We can only hope that negotiations with China go well this week and we get closer to having a real deal. What is the fair price for a DOM like Jigsaw trading? Well, I think that the price that Jigsaw asks is fair. $500 up front and $50 a month. And it's going to be some kind of variation on that. Why am I getting so many beeps? Does it work? People at work, yep. Oh, now she sees it. Somebody from r/day trading asks, why win in backtest but lose in real trading? This is a very common issue for new traders. Per my experience, the main reason traders do not fully follow their strategies as they do in backtest, that includes lack of discipline, so emotional to enter exit trades, cannot manage their trades. But okay, so it's mostly the back test was flawed. back test can look at open, high, low, close numbers, but it doesn't know if it's mostly that the back test was flawed. A back test might take a trade based on a bar's open/close, but it doesn't know if the order that set that open/close was a market buy or a market sell. So you don't actually know if you'd get that price with a market order. Losing one tick on each side is often enough to break the strategy. Or they just don't back test it far enough. Not include enough data. So it's often a good idea to include ticks of slippage. On enough data. Start with 5 years or overfitting. It's mostly that the backtest was flawed. A backtest might take a trade based on a bar's open/close, but it doesn't know if the order that set that open close was a market buy or a market sell. So you don't actually know if you'd get that price with a market order. Losing one tick on each side is often enough to break the strategy, so it's often a good idea to include 2 ticks of slippage. Other problems include not backtesting enough data, start with 5 years, or overfitting. Yeah, that's probably enough. Because, like, here's the problem. If it works in the backtest, then why aren't you just doing it programmatically and removing the human from the equation? Because what you find happens is when you remove the human from the equation, is that the strategy still doesn't work. The problem 99% of the time is that the strategy is just not any good. Or maybe not even that it's not any good, but that it's not enough. Like, there's a lot of strategies that kind of work, but they don't overcome the cost of trading. That's really common. Okay, we got 90 seconds or so. Thanks for streaming. Thanks for appreciating it and saying so and stuff. It's been a rough road the past 6 months, man, and I'm really I mean I love the new job, but I'm very dissatisfied with the state of the channel with it. And I don't know what to do about it. But we think long term. And I have every confidence that in the end it will work out for us. And who knows? You know, I think that I should spend more effort putting stuff into stocks. Maybe that ends up being a better thing in the long run anyways. Okay, here we go.
Order submitted.
Okay, so a little bit weaker than anticipated. 48.5 versus 49.5. So 1 point less than expected. Prices paid is a little hotter than expected. 69.4 versus 69. Market seems to be ignoring that. We just punched through the cost basis along. So here's a good time to come in and look at this. I'll show you this roadmap. So somewhere in here, it'll probably be a little bit lower by the time they get to it, but maybe somewhere around 25 might be stop out ish area. Wow, did the robot? How did it do that? Well, I'm going to let it go, but it seems to me that it shouldn't have taken a trade because we had news, right? It maybe it is only set to a minute. Maybe it's only set to a minute, but I don't like that trade at all. The chances of it coming back, I think, are pretty high, but I don't know. This is another one where, you know, I could leave the stream going for you guys, but none of you would stick around when we were doing it, so I think it's better to not. But we'll see. Tomorrow, we can discuss how it went, and I can look at why it's possibly not heeding the news thing correctly. But anyways, I should get going, guys. So I will see you tomorrow. In the meantime, stay excellent.